Hey everyone, welcome back. I hope you're all doing well. In today's video, we're going to dig into what's been happening with Bigbear.ai, a stock that's been on a pretty wild ride recently. If you've been following the AI sector, you already know it's been full of volatility, and Bigbear.ai has been right in the middle of it. The company has seen some sharp swings both up and down, and after the latest round of earnings and broader market moves, it's time to take a closer look at where things stand. But before we dive directly into Bigbear.ai, let's step back and look at the bigger picture. Recently, we had Nvidia's earnings report, which came in strong, solid sales, huge demand, basically the type of numbers you'd expect from a company that's become the backbone of AI computing. On paper, it was a good quarter. Yet, despite those impressive results, many AI-related stocks sold off right afterward. That sell-off didn't just hit Nvidia itself, which dropped around 3 to 3.5% in after-hours trading, but it spread across other companies in the sector as well. Robinhood slipped over 5%, Palantir fell close to 4%, and even Tesla took a hit. It was one of those days where good earnings weren't enough to keep investor sentiment positive. And that's where Bigbear.ai comes into the story. The company has been trading in a tight range lately, and investors are trying to figure out if it's going to hold its ground or break lower. For those who don't know much about Bigbear, let me give you a quick rundown. They're positioned as an artificial intelligence and machine learning company with a focus on large language models and data analytics. But unlike some AI firms that just chase buzzwords, Bigbear has carved out a niche in government and security contracts. They've worked with the Department of Defense, the U.S. Army, and even commercial clients like Delta Airlines. One of their most important relationships is with the TSA, which is looking at upgrading security infrastructure ahead of major global events like the World Cup and the Olympics. Now, here's where it gets interesting. There's chatter about a massive TSA contract potentially valued at over $5 billion. The focus of that contract is all about using AI to reduce reliance on manual labor while improving security. Think biometric ID checks, automated threat detection for both carry-on and checked baggage, advanced body scanning, and machine learning that can pick up risks faster than humans alone. And guess what? Bigbear.ai's technology lines up almost perfectly with what the TSA is asking for. Adding a twist to this story is something one of our community members pointed out. The current director of the TSA previously worked with a company that was later acquired by Bigbear.ai. He even served as a vice president there. While that doesn't guarantee anything, it definitely raises eyebrows when you're trying to figure out who's well-positioned to win a contract of this size. Now let's talk about the stock itself. Bigbear has been all over the map. A year ago, shares were hovering around $1. From there, they skyrocketed to over $10 at one point, which is a 500% gain if you had timed it perfectly. But since then, we've seen them fall back to the $2 range, rebound, and now hover near $5. That $5 level has become a critical support zone. If the stock holds above it, bulls may try to push it back towards $6. But if it breaks, the next support level sits closer to $4.75. Part of the recent selling pressure came after their earnings report. On the surface, the numbers looked ugly. The company reported a huge net loss, something in the ballpark of $228 million. Naturally, that scared a lot of investors away. But when you dig deeper, the reality isn't quite as bad as the headlines suggest. A lot of that loss came from accounting adjustments, like goodwill impairment and a revaluation of warrants and options, issued in earlier deals. Those are essentially one-time paper losses. If you strip those out, their actual operating loss was closer to $10 million, which, while still negative, is nowhere near as catastrophic as the reported figure made it seem. On the balance sheet side, they're not in terrible shape. They reported over $600 million in assets, which gives them some breathing room. So this isn't a case of a company on the verge of collapse, it's more about whether they can turn those assets and opportunities into consistent, profitable growth. Another angle worth paying attention to is the leadership team. Their CEO previously held roles in customs and border protection and worked closely with Homeland Security, which means he has deep ties to government agencies. That matters a lot when you're talking about winning contracts in sectors like defense and aviation security. Relationships and trust can sometimes be just as important as the technology itself. Speaking of technology, Bigbear's Veriscan platform is rolling out faster than many expected. In their latest update, the company announced it had expanded to airports like JFK in New York Denver International, Los Angeles, Montreal, and Vancouver. Each new deployment not only generates revenue, but also acts as proof of concept. The more real-world examples they can show, the stronger their case becomes for larger government contracts. So here's the big question. Where does Bigbear.Ai go from here? There are a couple of scenarios. Bullish scenario. If broader tech sentiment recovers, especially with Nvidia bouncing back after earnings, Big Bear could hold that $5 support and grind higher into the $5.50 to $6.30 range. A major contract win or positive news could act as a huge catalyst. And since the stock has a relatively small market cap, big moves happen fast. Bearish scenario. If investor sentiment stays weak or we see a market-wide correction, Big Bear could easily slip below $5 and test that $4.75 level, maybe even lower. Being a smaller AI stock, it's more vulnerable to sharp drops when fear takes over. Another factor to keep in mind is interest rates. Companies like Big Bear, which are still in their growth and scaling phase, benefit enormously from lower borrowing costs. If the Federal Reserve eventually starts cutting rates, it could unlock a lot of upside for names like this. Until then, though, volatility is the name of the game. Finally, let's not forget the big investors. Firms like BlackRock and Vanguard already have positions in Bigbear.Ai, which means institutional money is paying attention. For smaller investors, that's often a sign that there's at least some level of credibility here. So to wrap it all up, Bigbear.Ai is sitting at a crossroads. On one hand, you've got a company with real technology, government ties, and potentially massive contracts in the pipeline. On the other hand, you've got a stock that's been incredibly volatile, a balance sheet that shows both strengths and weaknesses, and a market that doesn't always reward good news. Whether this ends up being a breakout story or just another speculative play will depend heavily on what happens in the next couple of quarters. That's my breakdown for today. As always, this isn't financial advice, just an analysis of what's happening in the AI sector and specifically with Bigbear.Ai. If you're watching this stock, keep your eyes on that $5 support level and stay tuned for any updates around the TSA contract, because that could be the catalyst that defines Big Bear's future.